A democratic form of government must obey its own laws if that government is to survive. No person may be deprived of his right to privacy simply on the chance of finding evidence that may prove him guilty later. This is not due process of law. Reasonable searches are lawful, but whether or not a search is reasonable depends on the individual circumstance. The courts are inclined to allow more leeway in introducing evidence when a serious offense is involved. They tend to be more lenient in the search of a business establishment than of a private dwelling.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everybody. Johnny here, and in today's episode we are going to go over this Bitcoin chart that says we're possibly headed for some lower levels in the very short term. We'll dive a little deeper into the possibility of this fractal idea playing out, which again points to further movement to the downside. And of course, I'll give you guys my specific targets so you can make sure that you take advantage of this amazing re-entry opportunity. Now, the institutional investment and FOMO into this market has been responsible for the astronomical price rises we've seen out of Bitcoin in 2020. But there is a bit of speculation that this rally could be over due to the negative attention brought on by a certain altcoin. All right, here we have the Bitcoin 4-hour chart, and we have a possible fractal idea playing out. As you can see, the price action from here to here is extraordinarily similar to the price action from here to here, and it just so happens that this movement to the downside was in between the CME Futures last trade and the settlement date, and I'm really seeing a similar movement in price action here this month, as the CME last trade is coming up on December 24th with the settlement date on the 28th. So usually in between, historically, we've seen price move to the downside in between these two dates. It doesn't always happen, but it does happen more often than not, and it just so happens that a movement to the downside here would line up pretty well with the 61.8 Fibonacci channel. So if we look at this a little bit closer, I tried to line up these sections of price movement, and I tried to measure them and compare, and it just so happens they line up pretty well. So this first section lines up with the first section here, about 42 bars or 42 hours in length, and then it goes all the way back, all the way through till the fourth section here that is the same length in theory as this 42 bar box here that contains this fractal move that looks very similar to this one as well. Now, if we try to extrapolate a move to the downside out of this fractal being a possibility, one thing we can do is we try to measure or take a fib extension and try to measure the move down in the one that has already played out, and we got a movement down to the 4.272 Fibonacci extension, which I'm really expecting the same thing to happen here, as it just so happens it lines up with the monthly R1 traditional pivot. So this is what we're looking at, and it would bring price action back down to the bottom of this channel, which, you know, would be great to reset indicators, allow the altcoins to breathe and pump, and, you know, really just kind of give us a break from this crazy Bitcoin price action we've been seeing. I don't know about you guys. I mean, I'm enjoying it. I'm loving it, but I wouldn't mind to step away from my computer for a day or two. But yeah, I mean, you see this lines up really well with this box. This box would be 20 bars, the same one here, so 20 hours, and it just so happens that this time frame, or this price action in this time frame, happened to be at the exact same time last month, in between the CME last trade and the futures. Pretty interesting stuff. So if we take a look at the CME futures chart, you can see we still have this gap all the way down here at 18,150 at the bottom, and then 18,990 at the top. Now, I really only pay attention to the bottom number here because that's really the only one that matters, because if it's going to come down just to fill the gap, I don't see it. It doesn't usually go past the gap price, but sometimes it does. It really depends on the exchange that you're trading on, and the type of movement to the downside that we may see. So it looked like we were forming a bearish diamond top structure here. You can see it's a two-part pattern. We have our broadening structure into an ascending triangle. But you know, the way Bitcoin has been acting this bull run so far, it started the bull run by breaking a bearish pattern bullish. So you know, if this thing was able to break this pattern to the upside, I would not be surprised whatsoever, especially when you consider the massive amount of institutional money coming in. It's really hard to bet against Bitcoin right now. So let's try to get some confluence for an idea with Bitcoin. Let's go ahead and take a look at the total crypto market cap. Again, you know, this is looking extremely bullish. We appear to be in a falling wedge right now, which is a bullish, in this case, continuation pattern, but there is also the possibility here of a head and shoulders. So this head and shoulders would play out first, gives us a measured move down around here to the lower trend line of this falling wedge, and then once it would break out of this falling wedge, we'd likely get a move depending on how far down it comes. But you usually go from the bottom of the wedge to the top and then place your measured move at the point of breakout, which, you know, depending on where it broke out at, could line us up with this 618 fib extension here, right at about almost $700 billion. Now, this is looking bullish. We've nailed all of my targets, and we've been relying on the total crypto market cap to let us know, you know, when the sell-off is coming, or when, you know, to move our Bitcoin, or move our funds, excuse me, out of altcoins. So that's one thing we definitely use the total crypto market cap for. Another thing we use to let us know when we should or should not be in altcoins is Bitcoin dominance. Now, right now, Bitcoin dominance is shooting through the roof. We've already made it up to the 786 extension, which is just under 70%. Now, Bitcoin dominance has not been in the 70% range since January of this year. So it's been quite a while. Now, if we see this continue to take off, it's not going to be good for altcoins, but at some point you would think that we will get a cool off here and possible retest of this upper trend line. But right now, guys, it's really just not looking good for altcoins, especially if Bitcoin just continues to keep going the way it's going. Looking at the DXY, so trying to find some confluence for a bullish or bearish idea with Bitcoin, we have been turning to the DXY. So if you follow this channel, you know that we use this, we rely on it pretty heavily as a confirmations indicator. So we don't base our trades off of it. We refer to it to see if we are in the right or wrong trade. So you can see here the DXY is looking bullish. This is a bullish reversal pattern, this falling wedge, and this falling wedge gives us a pretty big measured move. Let's go ahead and open this chart. This gives us a pretty big move. Now, what I am expecting here out of the DXY, this is again former support, now resistance. At the very minimum, I'm expecting the DXY to come up and give us a bearish confirmation retest of this level, just over 91% on the index. Now, worst case scenario, or best case scenario, depending on who you ask, if we take the measured move here of this falling wedge, and we place our arrow at the point of breakout, that puts us right up here, right at another retest of this GAN former support, now resistance. Now that's an entire 5% move, and if you remember from previous videos, every 1% move up out of the DXY, we get anywhere from a 10 to a 15% move to the downside out of Bitcoin. So, you know, unless the DXY and Bitcoin's inverse correlation starts to weigh more towards, even if the dollar is rising in value, Bitcoin is still going to rise in value. And I think that we've crossed that threshold, because we did see the DXY get a secondary pump after breaking out of this falling wedge, and it really didn't affect the Bitcoin's price that much. So, the inverse correlation here, I'm not so sure how long it's going to last, but I do know that if we see the DXY pumping, it's not going to be good for Bitcoin. And if we see the DXY crashing, we know that's very good for Bitcoin. But at the same time, Bitcoin going up in value because the dollar's dropping in value is not a good thing for the overall economy. But it is what it is. And then we do have the S&P 500. So if you remember back in March, April of this year, the S&P 500 was a great leading indicator for Bitcoin, just because it is so closely correlated with the markets, and due to the fact of the CME, controlling a large amount of Bitcoin, it definitely moved with the CME. With the S&P 500. So the S&P 500, I'm going to be honest, this chart does not look bullish to me. Some people would say this looks bullish, and we might get some further continuation here to the upside, but this thing is just begging for a correction so bad. It has just been overinflated like crazy. So many green candles in a row due to so much Fed printing money. So much money printing going on, buying up all of these companies. I don't want to go down that road, but anyways, just to make a long story short, we do have this mega bearish divergence here, letting us know that at some point this crash is coming. Now, whether it's going to be a 14 or 15% crash or a 25 or 30 really depends on how much higher this can go. I think we should get rejected here at the 1414 before finally getting a correction, but we'll see. We will absolutely see. Either way, if the S&P 500 is crashing, that's not good for Bitcoin, because if that is crashing, we'll probably see the DXY rise in value due to simple supply and demand. The dollar will be more in demand because people will be selling their shares of stocks. Looking at the USDT market cap dominance, it is starting to rise a little bit here. That's just letting us know that people are taking profits or keeping their holdings in USDT. Looking at Ethereum market cap dominance, nothing special here. It just looks pretty weak, to be honest with you. We did possibly break out of this falling wedge, and it looks to be kind of retesting this upper trend line. So we'll see really what's going on there. But to wrap things up, guys, we are going to go over Ethereum really quickly. Again, if you remember, these are my two ratio charts. So here's Bitcoin USD, Ethereum USD, and this is essentially just the inverse of that. This is Ethereum and Bitcoin USD. This just lets me know which asset I should be in or holding or trading at the moment, and right now it's quite obviously Bitcoin. But we are looking to start to scale into some positions for Ethereum. So this Ethereum chart is looking mega hella bullish. This means it's going up. This is going to give some pretty good returns this coming altcoin season. Now, we do typically see Ethereum move with Bitcoin, but the way things are going right now, it may lag a little bit, and it might be a great leading indicator to let us know when altcoins are going to start popping off. And in fact, some of them already are, which is why I'm looking at you, Ethereum. Looking at you. Okay, so this is what we're looking at right now. So we are in this ascending triangle. We had this nice rounded bottom top here in continuation. Strong movement to the upside. We did get this crash back in March. If you guys remember, it was a pretty bad one, but it's just been climbing and climbing to the upside ever since. Now, we did get this roundish continuation, so this was a nice consolidation into a nice healthy movement to the upside. We do have nice consolidations and corrections in here, letting us know that this price action isn't going to come just rebound on our heads and get us all wrecked. So we know that Ethereum is moving steadily, and it should be a pretty reliable investment here moving forward, even though it's not financial advice. So looking at an Ethereum trade, if I were going to trade this, what would I do? So I'm looking at, one, the exponential moving averages, and two, the bullish pattern that it is in. So this is an ascending triangle pattern. This is a bullish continuation pattern. This lets us know that price action should continue to the upside. Now, how I intend on entering into this trade: one, I'm going to use my 200 exponential moving average, and on the 8 hour to let me know where to place my buy order. So I will have one down here. I always keep a trailing buy order on a specific moving average. If you want to know what those averages are, they vary depending on the crypto that I'm trading, but join the free Telegram group and you can get all that information in there. But anyway, so we are looking at an entry here. This is the yearly R2 traditional pivot, and sometimes the price action will like to come down there, but I'm not so sure it'll come down that far. So one thing I like to do is I like to take fib extensions, and we'll see just how high or how low we might go. So right at the beginning of the pattern, so from the top and the bottom at the beginning of the pattern is where I like to draw my extensions. So it looks like we're coming down, and we may get a retest of this 618 here, which would make complete sense. So we are going to make our thickest THICC buy order right here at this 618, right at 577.32, and then we will layer in a couple buy orders all the way down to the 200 8-hour EMA. Okay, another thing you can do too here as well, you can take these anchored VWAPs, so volume weighted average price, and you can place them at the beginning of each leg. So if you place these at the beginning of each leg, they give you a pretty solid idea to where price may retrace to. Now, I've been experimenting with this. It hasn't been a part of Tradingview for all that long, but it is a very, very, very useful tool. You can see here, it got the bounce here, letting us know we are in a clear uptrend. Okay, so we'll put one order here. Now, how much you're risking in each trade really depends on your risk tolerance, and what it is you're trying to do. Now, if you're just spot trading and not using any leverage, this is a great way to enter into this price movement before it really gets going. And I really see Ethereum getting going this year, heading into 2021. So right now we do have 4 buy orders layered in right here, looking to trade this price action. We do not have a stop loss because there's really not a need for a stop loss here, because we're not trading with any leverage. We're just entering into the market and getting our positions ready to go for Ethereum. Now, we could see the Ethereum price head up to 140%, putting us right over $900, but I really expect at least all-time highs being met in 2021. That's up around $1,438, which would give us a pretty significant move. Again, that's 140% from where we are at right now. So Ethereum looking hella bullish. Really excited to see what this does in 2021. As far as DeFi and everything else goes, Ethereum is just a sleeping giant, and when it wakes up, it's gonna let people know that it's around. That's all I gotta say about that. All right, guys, just a recap really quick, looking at Bitcoin to come down if this fractal plays out to $20,597. We've got a buy order sitting there. We do also have one sitting just above this top trend line of this ascending triangle, because when we did break out of this ascending triangle or double bottom with neckline, we didn't get the retest of this level, so we didn't get the bullish confirmation that this has now been turned into support that was former resistance. And this is a pretty significant level. It is the $20,000, $19,600 resistance area that was really hard to get across, so it took Bitcoin quite a few times. So it just naturally leads to the expectation that we will get price action to come back down and retest this support area, giving us the bullish confirmation that we are going to continue heading further to the upside. All right, guys, that's it. Thank you so much for dropping in with me today. I hope you guys really enjoyed what I brought for you. I hope that you guys have profitable trades and you have a great hump day, and I'll see y'all tomorrow. Bye.